Hey, this is Michael Blank on themichaelblank.com. This is the case study for analyzing basic old property at a 10 cap going in. So just to review the numbers from the article, and we have 10 units here. We're buying it at $600,000, and the net operating income is just about $60,000, giving us a 10 cap. All right. So the deal analyzer then takes the information you add here and creates different key metrics for you based on how you structure the deal with the investors. So in this case, we're giving the investors 75%, and we are keeping 25% for syndicating the deal. So far, we are not paying ourselves anything in this deal, but we certainly could. We have $10,000 in repairs, which is about $1,000 a unit, 10% vacancy, and 45% expensive income. So pretty standard stuff, nothing really too fancy. Our investors are getting 11% average annual return, and we're reselling the asset at the same cap rate we bought it. So no upside in this thing at all. And as you can see here, the investors are making a pretty good return for very low risk, and everyone is happy. So we can take a look at the returns here, and it shows you what your income will be for owning 25% of the building. So you can see you're making between $7,000–8,000 a year, and you're getting a $40,000 check at resale. And your investors are getting the returns up here, shows you what the cash flow is, as well as the proceeds from the sale and the overall return. So that's, you can quickly look at the returns here. Let's take a look at the P&L. Shows you the income and the vacancy rate. All right, the expenses, the cash flow available, the debt service, the 75% going to your investors, 25% going to you, and what the cash and cash return is. So, and this simply assumes that your rent goes up by 3% and your expenses go up by 3%. Very standard, boring, nothing really very interesting there. This tab shows you the acquisition costs. So these are your due diligence costs and your closing costs. So due diligence costs is a property inspection per $250 a unit, lead paint inspection. You may not have these costs. Legal fees for setting up the entity, as well as your private placement memorandum. If you don't have investors, you don't need this. And then you simply set this number to 0, and it tells you, or rather, it shows you what the returns are for you on that one tab here. So this works without investors also. Anyway, and that's really it. Now, if we want to look at the other scenario where I'm increasing rent slightly each year, we can go to the P&L tab here, okay, and I'm going to unhide this row here. So first year we're getting an average rent of $1,000. Now what if we're getting the average rent of $1,100? So we're just raising it by $100. So I'm going to put $1,100 here, and I'm going to get $1,200 here. So over the course of 3 years, I raise the rents from $1,000 to $1,400, which is not a lot. It's very doable, especially if you're buying a building that is under market. But what does that do to our returns? So we get back over here, and you see here, my goodness, the investors are making an 18% average annual return. So if you look over here, quite a bit of cash flow, 18% return. And then down here, you're the manager, you're making this per year. So if you're making this kind of return, I would structure this deal differently, because this is quite a high return. You want to be between 10 or 15%. So maybe you can do things like give the investors less, maybe 60%. That reduces down to 15. Maybe you pay yourself a 2% acquisition fee. How about $12,000 at closing? That's not bad. Now the return is down to 13%. So we're pretty much done here. You can pay yourself an asset management fee or a capital transaction fee when you close. You can do that. Not necessary. But now you got a pretty good looking deal here. So point is, you can you don't need a very exciting deal to make a reasonable return all around. So hopefully that was a lesson here, and you got a little feel for the syndicated deal analyzer, which is available for purchase for $99, along with 7 additional very detailed videos with a total runtime of 60 minutes. Hope that helps. Thanks for listening.